Hi, good morning and welcome to my morning report analysis videos. I'm with me, Rich Perry, market analyst at Handtech Markets on Tuesday, the 11th of July. We've got a fairly sort of mixed outlook, nothing too significant in terms of direction, a little bit sort of mixed on equities, bit sort of uncertain really on forex markets. This is sort of all coming ahead of some key risk events at the end of the week, whereby we've got Janet Yellen testifying before Congress on Wednesday and Thursday. We've also got big tier 1 data, US inflation, CPI inflation, and retail sales on Friday. So markets are a little bit cautious, I think, at the moment. Let's just show you the board. That's not the board, that's the announcements. There's the board. You haven't really got any direction on the euro. Yen continues to be weaker, and that is continuing on from this sort of move from the Bank of Japan last week to continue with its asset purchases. The sort of differential between the yields continues to rise in the last sort of week or so. Treasury yield on the 10-year has gone up sort of 26, I think 25, 26 basis points, whereas on the Japanese yen it's sort of only 5 basis points. So it's a big sort of a move that we've seen on treasury yields, and that is helping to drive the dollar yen higher, basically. And at the moment we've got the dollar, which is basically consolidating this recent sort of move at the moment. Now what we have got is the oil price also sort of now beginning to consolidate a touch in the last couple of days. Having had sharp declines, it's sort of bounced a little bit off support, but started to find support, and that's coming as suggestions that perhaps OPEC are going to try and sort of persuade or put pressure on, I suppose, Nigeria and Libya to cut its production growth or even curb production, considering the increase in production has sort of increased the OPEC production across the board, and that is certainly not helping the oil price, which continues to remain under pressure as the US increases supplies as well. But yeah, nothing massively going on in other than that. Now, in terms of our economic announcements today, JOLTS pretty much is the only real announcement. And that comes at 3 o'clock. Jobs job openings 595, down from 604. So sort of a couple of percent of decline there on the jobs openings. Nothing too significant, but still pretty strong numbers there. So that takes me to my chart of the day, which is euro sterling. Now this is an interesting chart because euro sterling has rallied back to this big key resistance 8850. Zoom out, you can see 8850 has been a bit of a pivot, hasn't it? Bit of a top and resistance in the last sort of 6-8 months really, and every time it's got back to 8850 it has failed in the last month or so. But when I say failed, I mean it continues to test that resistance, and you're actually getting sort of arguably a triangle, although it's not great because he didn't have that point touching the triangle, but arguably it's sort of developing into a bit of a triangle pattern, whereby if you do get a breakout you could then measure the target to the upside again, and that target would give you around about sort of almost 200 pips of upside. So you've just dropped back again today. You've had the last couple of sessions testing that 8850, but not being able to achieve the closing breakout. But you look at these momentum indicators, they are strong. They are sort of pointing towards continued pressure, with that RSI finding support continually above 50. MACD lines sort of still positively configured, stochastics positive. I think this is a sort of a buy into weakness strategy, because I think there is further upside to be seen on the euro, and I think that sterling doesn't necessarily look especially strong, so I think that would drive euro sterling higher, and a close above 8850 would drive that breakout. That would be a considerable breakout and reopen the upside. So buying into weakness, you've got that sort of uptrend, you could argue, which currently comes in around 87.80 area. So a little bit of a near-term dip on euro sterling, but I would say that could be a chance to buy. Look at this hourly chart where we have broken down just this morning below that support 88.30, but 88.10 comes in then as a basis of support, as it had done for the last sort of couple of weeks. Has been having been resistance, that now turns into support. So you've got a pretty decent band of support, I'd say, 87.90 up towards 88.10. I'd say that's a pretty decent band of support to use for a buying opportunity, and that's what I'll be looking out for. So I wish you good luck in your trading today, and I will speak to you later. Thank you.